Good morning, everyone. Welcome to the another video, another session of branch banking. In the previous video, we have talked about the concept and definition of branch banking, and in this particular video, we are going to discuss the various merits of branch banking, the various advantages which are enjoyed by the branch banking system. Right, not only will be focusing on the merits of the branch banking, but at the same time, parallelly, what we are going to do, we are also going to have a comparative view, the comparative analysis sort of between whatever merits which are being enjoyed by the branch banking, or how it can be termed or turn up as the demerits for the unit banking. So we'll have a comparative look in for both the systems, and we'll be moving in that particular direction. Just having a bit idea about what we mean by branch banking as a concept, we are looking and we are just recalling the concept which we have seen in the previous video, that it is a system of banking in which a banking institution establishes its head or the main office in one of the big city, and it conducts its various banking related transaction and executes the other operations in pan India or in the entire country all over the world, right, with the help of its branches or offices. And these branches or offices are also known by different names: pay offices, sub offices, sub branches, and other technical names also. So directly what we are doing, we have just taken care of the concept of branch banking. It is also known as the multiple office banking, under which a bank as a single legal entity operates more than one banking office, right? We are just directly jumping to the various merits that are enjoyed by the branch banking. So this is the snapshot or the various merits which are enjoyed by the branch banking. And economies of large scale of operations are enjoyed, right? Diversification of risk or spreading of the risk. They have the economy in the cash reserves, diversification of various deposits and assets are possible, right? Cheap remittance facility, uniform interest rates, proper use of capital can be enjoyed by the branch banking, better facilities to the customers, and also the effective control with the help of or by the central banking, that is RBI in case of India. So as per the tradition, we'll be talking and explaining each and every point in detail. So let us come to the very first point, and that is economies of large scale of operations. So what we mean by economies of large scale of operation, that the fixed cost comes in the reducing way, and because of the large number of branches which possesses huge financial resources, and therefore it enjoys the benefits of large scale of operations, and these can be like highly trained and experienced staff is appointed, right, which increases the efficiency of management, not only like in terms of unit banking. So few people are there, few staff is there, right? So in that case, people who belongs to that particular limited set scale, they are being appointed, so it will have the increased cost. Similarly, division of labor is introduced in the banking operation, which ensures greater economy in the working of the bank. So right man at right place can be appointed with the specialization. Division of work can be there, division of labor can be, so people who are good at some of the skills can be deployed to another branches, right? Localization impact and all these things can be. Similarly, larger financial resources and wider geographical coverage increases the public confidence in the banking system. So this is one of the advantage, that is economies of having large scale of operations. Particularly when we are talking about economies of large scale of operation, it refers to when your fixed costs reduces to a certain level because of the economies, because of the large scale of operations, right? So in terms of HR, in terms of labor, in terms of experience, in terms of training, in terms of right man at right place, in terms of financial resources, in terms of other things also, when you're making purchases, so the cost will be reduced. So this is being enjoyed by the branch banking. So this is the economies of large scale of operation which are enjoyed by the branch banking because of the larger number of branches as compared to the unit banking. This economies of large scale of operation is absent. So this is absent in case of unit banking. Now another point is spreading of risk. Now this is one of the most important advantage which is enjoyed by the banking. So there are chances of lesser risk and greater capacity to meet risk, and this is possible with the help of, or because following this particular branch banking concept, because since there is a geographical spreading and diversification of risk, the possibility of failure of the bank is in the remote. The losses occurred by some branches may be offset by the profits earned by the other branches. What we mean by this is, if there is only one bank, if there is only one branch, in case of unit banking, so if the localization impact is negative, if certain natural calamity has occurred or any other problem which adversely affected the working of that particular one branch, it will destroy the entire bank then, right? But in the system, in the case of branch banking, if few of the bank or branches are negatively impacted, negatively affected, the other branches which are doing good in profits, right, these branches can have a backup sort of to those branches which are not performing good. So this way, this can be termed as the diversification of risk principle. So one line I would like to quote here, that in order to understand the diversification of risk, it is important to understand that it's an old saying which talks about that: do not put all your eggs into the single basket, because if that basket fails, all of your eggs, all your investment, all the entire thing will be in vain, will get destroyed. So one unit bank, one branch, if they have been negatively impacted, if that particular unit bank is adversely affected, it will ruin the entire image, it will get destroy the entire bank. But now this can be offset, this can be compensated with the branches which are having the profitabilities, right? So this is diversification of risk or spreading of risk. Coming to the third point, economy in cash reserves. When you're talking about cash reserve, because this branch banking system, a particular branch can operate without keeping large number of idle or large amount of idle reserves. In time of the need, the resources can be transferred from one branch to another. Say for example, one branch is having the liquidity position, good liquidity position, and another branch is not having, is running short of cash. So it can have cash remitted from another branches. So economy in cash reserves is also there, because CRR or cash reserve is maintained with RBI or the central banking. It is not branch wise, it is always bank wise. Another point is diversification on deposits and assets. So there is greater diversification on both deposits and assets under branch banking system because of wider geographical coverage. What we mean by, so there are two specific points which can clarify this particular topic, this particular point, and that is that deposits are received from the areas where savings are in plenty, right? Where there are more savers, we are receiving the deposits, branches are receiving the deposits. And on the similar context, in the similar context, loans are extended in those areas where funds are scarce and interest rates are high, because geographical reach is high, geographical reach is wider. So we are taking the deposits from the people who belongs to the different sections, who belongs to the different geographical areas, and we are taking care of the deposits, and we are receiving in the forms of deposit accounts, in the form of savings, whereas we are extending those deposits in the forms of loans and advances to the various geographical areas where there are customers who are interested to take loans on high rates, right? So this is diversification. You're diversifying both, you are having a good clientage in that particular aspect. Again, cheap remittance facility. So cheap remittance facility means, since bank branches are spread over the entire country, whole country, it is easier and cheaper to transfer funds from one place to another, because branches are belonging to one bank only. So inter-branch indebtedness is more easily adjusted than inter-bank indebtedness, right? So two banks are there, they are charging one another because there are no branches pertaining to one entity or one bank. But branch banking concept is what they are following, they are having their own branches, so mutual consensus can be developed, and that is known as inter-branch indebtedness, right? But in case when you are having the unit banking facility, so you're going for correspondent banking, so every transaction will charge you something, right? So more financial cost, so expensive remittance facility is there. Now again, coming to this uniform interest rates. Uniform interest rates means because every branch is working under the one head office, therefore mobility of capital is increasing, which in turn brings about equality in the interest rate. Two branches, three branches, or different branches cannot have different interest rate because of the geographical location or because of any other factor. So one bank will be following the one similar rate of interest across all the branches. But since unit banks are different, different management is there, different ownership structure is there, therefore within the same circle, within the same geographical area, different banks can have different interest rates. So uniformity will not be there, but this is avoided in case of branch banking, because across all the branches, in not only the interest rate, but all the services, all the products are of uniform nature. The even the ambience in one bank will be closely uniform across all the branches. So this is the beauty of the branch banking. Proper use of capital, because why we are saying proper use of capital under the branch banking system, because if a branch has excess reserves but no opportunity, what we mean by this is that they are having the liquidity, they are having the funds, they are having the more deposits, but investment and loans are not made in that particular geographical area, in that particular area, or by that particular branch. So it can transfer the resources to other branches, which can make the most profitable use of those deposits, of those resources. So this is how proper use of capital is there, right? Another is better facilities to customers. So the customer gets greater and better facilities under the branch banking system, and it is because of the small number of customers per branch and the increased efficiency achieved through large scale of operations. What it means? It means if we see the per branch or walk-in customers or per branch number of customers is less, but the entire branch or entire bank have larger customer base. So it enjoys the economies of scale, and therefore it achieves the increased efficiency. So in that case, better facilities can be provided to the customers. Again, the most important last point is effective control. Unit banking, because there were large number of unit banking there, therefore the central bank may have a problem to investigate, to authenticate, and to verify the transactions, and have a greater control over every unit bank which is present in the system. But in this particular case, branch banking, the central bank have a more efficient control over the banks, because it has to deal only with few big branches, nor with each individual branch, right? Because there are two types of audits. One is the external performed by RBI, another is your internal audits, whereby the auditors from the internal department of the bank, they are visiting the branches of that particular bank. So the big branches can be taken care by the RBI or the central banking institution, central banking audit team, whereas the other smaller and individual branches can be taken care by the internal audit team, right? So what actually it did, it ensures better implementation of the monetary policy, so that RBI can also focus on the another areas, and that ensures the better implementation of the monetary policy. So these are few of the merits and advantages which are enjoyed by the branch banking, because of that particular unique feature of having different branches across the country, across India, which are not enjoyed by the unit banking, and can be summed up with the demerits. With these words, thank you everyone. Thank you so much.